Even as the S&P 500 hovers near all-time highs, something interesting is happening under the surface. Over the past 2 weeks, nearly as many stocks have hit 52-week lows as 52-week highs. Now, is this a warning sign for the market? Welcome to Trading Nation. I'm Kate Rogers. Ari Wald is with Oppenheimer, and Aaron Gibbs is with S&P Global. Thank you both so much for being here. Aaron, we're going to kick it off with you. What do you make of this market action right now?
So right now, this actually looks very healthy to us. First of all, for the past 2 weeks, volume has really dropped off. It's sort of the summer doldrums. But another thing that we've been looking at is just leadership rotation. So having the same number of stocks hit highs and lows, for us, is this change of stocks from these very high momentum, very high valuation stocks, maybe coming down after the past year or so. And when you look at the overall valuations of the S&P 500, we're trading at a little below 18 times forward earnings, which is actually starting to come within the more normal expected range, really down from that 8.5 times, which was really the high peak. Also, when you look at the fundamentals, we're still looking at 9 to 10% earnings growth for the second half of the year, 11% growth for next year. Anytime we're looking at double-digit earnings growth, it's a safe bet. So we really just see this as a pause, taking a break, valuations coming down, and maybe a little shift in leadership.
Okay, so Ari, we'll go to you now. Do you see this one as a bad sign for stocks right now, or do you think we're okay?
I think we're okay. We see it as healthy rotations as well, which is a very important point that you picked up on here, Kate. And for us, what's going on here, why this is healthy, what it's allowing to happen is that the excesses are getting cleared internally, while the overall market doesn't suffer a really meaningful decline. And I think not only is it just a healthy pause, I think it's really going to help extend the duration of the advance as well. You know, take for instance the S&P 500 only down about 3% peak to trough, but the percentage of stocks on the NYSE has fallen to 50%, which is the lowest reading since November of last year, and on par with some of the lowest readings throughout the 2003 to 2007 bull market as well. So what we see as oversold firepower with the combination of strong seasonals approaching in the fourth quarter as well. So we see conditions as tactical. We think we are set up for this rally. I will say it is important for participation to broaden on that rally. What we did find is that on new highs, if the S&P were to make a new high, but that 200-day participation level doesn't get back above 60%, that has tended to be followed by below average returns. So something to watch on that rally, but the point here is that we're oversold and setting up for a Q4 rally.
Aaron, I know you mentioned you think we're in kind of a pause right now. What do you think is going to be a catalyst for future action, whether it's up or down?
Well, typically we will way further down the road. We've got our Santa Claus rally that we almost always have, but just coming out of summer, seeing higher volume, seeing people get back into trading, and also looking at some of the third quarter earnings, and also the Fed maybe finally agreeing not to raise rate. Those could all be catalysts for the markets to restart returning higher.
Ari, do you want to make any predictions?
I think you should be looking at the bond market. I think 212 on the 10-year is an important level. Yields have been trading lower. They haven't been trading well. I think if you can see yields hold that support level and start to inflect higher, I think some of these reflationary tailwinds will come back to the market. Some of the high beta sectors, the pro-cyclical sectors like financials, if they start working, I think you could really start to see breadth expand and this rally get back into gear.
All right, great. Well, thank you both so much for your time. Aaron and Ari, great to have you, and thank you for watching. This is Trading Nation, and I'm Kate Rogers.